Hey everyone, coming close to the end of the first half of the year and going into H2, thought it would be a good idea to do like a macro focus video. I kept looking at charts the last couple of days and I kind of see uh, uh, a narrative forming or like everything is pointing towards something, and that something is inflation coming back. And I'll look at what can potentially happen for stocks and commodities, currencies, and whatnot. So first of all, let's look at the performance this year, and we see tech are is the big performer. Like kind of everyone knows this already, and the underperformers were healthcare, energy, and utilities, defensive stuff, kind of that. And we are likely to see a rotation into those sectors moving forward. Like tech is way overbought, and don't think it can go much higher, only through the power of zero DTs, but that those are out off the table for a while. They need a strong support from large flows that can only happen on quarterly expirations. And now with the quarterly expiration done, we are kind of a ways off from being in an environment where that is possible again. Let's look at delta first, and we can see a large drop in delta. This is lower delta, which is out of the money puts and in the money calls. This move was almost entirely fueled by in the money calls, and we can also see it here, the correlation with this. So first, red line is out of the money puts, blue line is in the money calls. The combination of these two allow this rally, and we can see a very positive correlation with this line here, which is lower delta. And after Friday's expiration, we have a huge drop in lower delta. I would expect price to follow this down. It won't be this low because the OI is tracked with 1 day delay. So the OI is a bit higher than what the closing values on Friday were. I would expect it's around here, but still that's pointing towards a 420, 425 target for the pullback that will be happening in the next couple of weeks. And the deltas look a lot more tame. Like we had huge drop, especially for QQQ. Let me open it as well. Like this was going to 800,000 previously. Now it's 600k, and the next big expiration is July. But is nowhere near as close as this, and all of these are already worth very little. So there are no puts to burn and no short-term flows to keep us going up. This will start being a thing again if we go down, and then as we go up again, they will burn the puts again. But first, we need a drop to 420, and an extreme move would be 400. But I don't think we get it. We get the 400 very likely. Okay, and QQQ delta profile as well. Again, this was 600k before that. Now it's below 400k. The drop in puts was huge. The drop in calls was huge. I don't have the over time tracking for QQ yet. I will make it over time. But yeah, the drop was unprecedented. Like I think it was the biggest drop in OI that we've ever seen in history. Let me show, because this was cumulative OI, and we went from this to all the way to this. This is the biggest drop ever. I don't think we ever had this during the bull market as well. I only have data since October 2021, but I don't think it was ever higher than this before that. So this was the bigger drop in OI, the biggest drop in OI in history. Now back to this. So to recap, I think we get biggest drop in history. I think we get a retest of 424.25. Uh, an extreme move would be 400, but very, very unlikely, at least immediately. I mean, by the end of the month. Then what we are to expect a migration for tech from tech into energy, into healthcare, and into utilities. Why do I think that? Because I've kind of changed my mind on oil. My thesis, or not my thesis necessarily, but how I've been looking at things until now, is around this 70-65 level. So let's do the weekly, let's say. And when we look back, this is a very important level. Like when we break above it, surge up. When we drop below it, surge down. Some consolidation here, then continuation up. Support here. Then when we drop, we take it out and we drop a lot. It can be resistance as well. We didn't capture it. We dropped back down here as well. Now I think we have the opposite of this situation here, because if we if we were to drop, if we would have had dropped, it would have happened by now. And at the moment, it's starting to look good again because we're getting this bottomy um, formation that will eventually lead to a breakout and likely a retest of the highs. I would expect this to happen in H2. Not a very accurate timeline, but in the next 6 months, I think we get another move up in oil. And the main reason is that we haven't taken out this critical 65-70 area. We've we keep testing it down, we keep bouncing off it, and with the bullish sentiment and relatively strong economic data, unless we get a big recessionary bunch of data relatively soon, and that means especially unemployment picking up a lot. It has a slight pickup, but not big enough yet. So we would need something like unemployment to go above 4% in the next 2 months for this not to happen. That's a possibility, but again, relatively unlikely. So would this having this shape here uh, and the constant rejecting of a move down that is supposed to be a flush down, like whenever we lose this area, it's a surge down. It's not just a gentle drop and we just go down a bit and that's it. No, when we lose this area, we should go down to 40-ish. And that should have happened already. Because it hasn't happened, then this becomes accumulation. So we have a lot of accumulation in this 65 towards 80 area, and at some point it will break out and go crazy. I would assume this is the key level. So when we go above 77, next time we go to 80, it will be the real deal. It will no longer be a rejection situation, it will be a breakout situation, and then it just goes up and up and up and up. And we're seeing kind of the same thing in other other metals like copper. This is now, it was a pullback, it was a breakdown to 355, but now it looks like a failed breakdown and we have a strong bounce here. Now this looks like a bull flag, and likely that this bull flag will lead to a breakout and a retest of this area here, the high area, to 4.8. If you follow me before, you know that there's a high correlation between CPI and the copper prices. Actually, I won't pull it up here, but if copper goes out, expect CPI to go up again. If oil goes up, expect CPI to go up again. So we're set up for a resurgence in inflation. If this plays out like this, we are set up for a large resurgence in inflation in H2, and this is very, very bad for equities. But we will see. Another thing to note is then, okay, I have this thesis. Now we look for evidence in the stock charts, and let's let's take which is it? Actually, let's add some. for some, my thesis was this. So we get, I think this is a week of pattern, but we need a blow off top for it to be a really, really nice short. So again, we lost this trend line, which is supposed to make cause a breakdown, and that breakdown should happen next week. If it doesn't happen next week, and I don't think it will, we get a surge down. Like if it happens next week, we get a surge down probably to the next level, like 85, 90, something like this, probably 90. But if it doesn't happen next week, then this is once again uh, an attempt to go lower that fails to materialize. We have this horizontal support here. We have multiple ranges. We actually have a horizontal range here. And I expect next week, because I expect oil to be bullish, we go back in the channel and then we start going up again. So I said that in H2, but I think the movement will start as early as next week. And then some will move to a blow off top move, probably make a new high, maybe go as high as 140, something like that. And only after that we get the big crush, because a second wave of inflation I think will cause a stock market crash. Then DXY. So DXY dropped last week because of the uh, ECB hike. This last drop in the last couple of days was all ECB hike. The ECB was more hawkish than the Fed because they actually hiked, and uh, the currency strength is based on hawkish expectations. Because the ECB hiked and the Fed did not, even though the Fed said they might hike more at future meetings, uh, the USD is weaker than the euro. So the USD dropped relative to the euro. The euro is like 65% of DXY, and we had a drop in DXY as well. But when we look at it like this, for example, let's zoom in. This is actually a bullish consolidation. The same kind of bottoming and accumulation in dollar that we see in other stuff as well. And I think this will very soon break out to the upside. We have an RSI trend line that is holding for now. It's also very close to a price trend line. This is kind of unsure as a trend line now because it only has a couple of points, but we'll see very soon that if it holds or not. And not only this, individual pairings of currencies. Let's go back to here. Look very bullish for the dollar. So this is euro. It looks almost identical to DXY, as you can see, because it's mostly USD euro. USD GDP. We have a breakdown here, but we're coming into a big horizontal level. This was a huge breakout level back in April 2022, and it caused this move. It will have a lot of demand stored up because price doesn't stay a long time here. I would expect a huge bounce when we hit it. So when we hit 0.7677 actually USD GDP, if you're playing forex, I think it's a great buy here, and I think we'll get a huge surge up in USD GDP. Then USD JPI moving higher, USD Swiss franc, it's at the support area, very close to the support area, even if it goes a bit lower. USD yuan. The thing is that there's an expectation that the Chinese government will put in more stimulus. More stimulus means weaker currency. And what is to be expected if they come up with more stimulus is for the yuan to devalue even further from the dollar. So this will keep going up, most likely. USD AUD again at important support level, very oversold on RSI. Expect a bounce here and it will go back up relatively quickly. USD CAD, same kind of situation. If I extend this trend line here, we are at the back test for it. If we put in horizontal level, we overshot a bit here, but it's this area from here to here. So again, at a very important support area, and I think it bounces, it goes higher. USD with the Indian rupee, this is all consolidation and it looks bullish to me. RSI is very low, so I would expect small drop, then it goes up and it will break out versus this. USD TWD doesn't matter, but you get the idea. I think the dollar will go up and go up a lot in the very near future. And last but not least, we have yields. And when we go to the weekly chart, does this look bearish to you? This looks like a huge bull flag, and we're about to break out from it. Still getting rejected from now, but higher for longer is here to stay. And uh, this kind of goes hand in hand with oil. Like, let's add oil to this chart. Let's do a new scale. This one I can kill. Okay. See how correlated it is? Oil. And if I am bullish oil, I also have to be bullish yields and bearish bonds. So if this starts to go up, oil actually, we can see here that oil front ran it. Oil went up first, led yields going higher. And if oil will go back up and will go back up relatively soon, then yields will break out as well. And this is a very large consolidation. Like we've been consolidating in this range from October 2022 until now. All of this is very bearish to equities in my opinion. And I'm kind of starting to understand Chem's thesis about uh, the market dropping significantly in the near future. Like all of this will cause a huge breakout. And the minimum we will see if this breaks out is a double up of this. So lows of the range, highs of the range. Come on, do what I tell you. I have no idea. It's stuck, locked in, whatever. So let's do it by hand. Ah, zooming out works. Regular. So we might see the 10-year yield at 5.2. And believe it or not, this is also a huge horizontal level. Let's take out oil, we don't care anymore. Doubling this up approximately leads us to this bottom area. Like I would say, between 5.2 and 5.5. What will equities do if this happens? Probably not that well. On the 20 year and the 30 year, this breakout already happened. Like this is just a retest. This is bullish. It's not going back down immediately. When you get a breakout and the breakout doesn't get immediately rejected, it's a very bullish sign for this. Like we just have the recent experience with SPY. Going back here, like this was the breakout. This version got immediately rejected, went back up. This one didn't get rejected, so it surged back up again. And every time this happens, like we can find numerous examples of breakouts happening and then not getting rejected, and they keep going as well. Like this is a breakout, it didn't get rejected, it turned into support, it went back up. And this is exactly what we are seeing on the 20 year. Like got a pullback, back to this breakout trend line, and now it's not going up, it's holding it as a support. It's only a matter of time before it surges back up. And commodities are showing this with oil and copper. Then we have yield showing this. We have DXY showing this, and on top of this, we even have Bitcoin showing it. I didn't add Bitcoin to this one, but I wanted to do it as well. I am also bullish Bitcoin. I have too much shit on this graph. Same kind of situation. This is a huge flag, and it's looking very close to exploding up. And again, the explosion up will be relatively big, the size of this pennant. So we have 24% here, 6K, so probably 37K, 48K. Yeah, something like this. And again, it also lines up with this horizontal area. Very elegant from a TA perspective that it goes to this level. Uh, kind of all asset classes are pointing to a resurgence in inflation. If the Fed doesn't do anything about it, this will happen. I don't think equities will initially do well, but I think the equities rally already happened. Most of what we will be seeing moving forward is Megatech relatively struggling, but it might have a last surge up, like I explained in my scenario, or I think we pull back to 420-ish, then we go back to the highs. I think that will be the last move up for equities. After that last move up for equities, it's all downhill because inflation resurging, because commodities going up, Bitcoin going up, oil going up, and because this will happen, I think we get a rotation out of this the sector that have been overperforming and into energy, into healthcare, into defensive stuff like utilities. And I have uh, Nextra Energy here as is the one of the biggest parts of utilities, and I think it's preparing to break out. Immediate target is 86, but again, I think it goes higher. This is still a week off pattern, but we haven't I don't think we have had the last stop yet. So when this breaks out, it probably goes up to 100 to have like a blow off top move in utilities as well. God damn it. I keep like this. So this will be my target for Nextra is 100 in H2. It will go up, then blow off top, 100, we have the UTAD, and then we have the complete crash. Okay, then another thing to note is there is the expectation of Chinese stimulus. Like I said, there was a nice large flow for FXY, which is China large cap ETF on Friday. They might announce it over the weekend. I don't know, but Chinese stuff is looking pretty good. So let's look at Yin first. They're very similar. So this is Yin, bottoming pattern here, recapturing this horizontal level here after the overshoot. Minimum would be 71. This one moves fast because it's 3x. On FXY, it looks almost the same. We'll recapture this level here. This is a long-term level that goes back quite a long time, January 2016. We have here October 28, 2011 was a resistance here, and so on. So a big level to claim back. And I actually think because Chinese equities have underperformed a lot, if the Chinese stimulus news is good news, plus commodities going up is the China reopening trade, this can go and run quite a lot, up to 38, possibly even more, I don't know. Then we have healthcare, and I'll only talk about PFE and CVS. Uh, Huge underperformance. Uh, Another bottoming pattern. Like I don't know if it will happen like starting next week or anything like that, but by end of quarter I think we'll have the setup for uh, the move up in healthcare. What the fuck am I clicking this? Okay, potentially another small drop. I don't think it will go to make a new low. This would be the level to buy at if you are interested in buying healthcare. But like 38, assuming it pulls back with the market a bit, a telling sign will be that if the market pulls back, this Pfizer should not pull back to the lows. The fact that it will make a higher low is very important and telling that it is preparing to break out. And then we can just draw a trend line from this. We will see it like this. When it breaks out above 39, it's gonna go. And the target is, I'm assuming, like 47-ish. We shall see. CVS, kind of the same. We had that drop on last week, which I saw it happened, but I have no idea why it happened. But clear bullish divergence. I think this is also in consolidation mode, making a bottom. We didn't make a new bottom on last week, and I think it's just going to do like some more of this until it eventually goes higher, and target is 88.90. Another sector that I think will do relatively well is financials. Um, I'm not too sure about this one because of uh, the market's perception about duration hedging. So the banks that failed because they did not hedge their bonds that had low yield, and now bonds have a high yield, and I don't know how to explain it very quickly, but the idea is, in theory, yield going higher is good for banks, and in theory this will go up to 47, 48, probably retest the sort of 47, but not too sure about it again because the market might be scared that more banks will fail if yields go back up again. XLE, just an example of the same we saw in XOM. So, and oil and Nextra and whatnot. This is accumulation, no new lows since March, and we might see another drop next week, but I think when the breakout happens, it will have legs, and we will see XLE at 100 as the blow off top in XLE before the market has that big drop. And again, this doesn't mean the market goes up with it. I would expect actually the opposite, just like the market went down when uh, oil had its first surge and XLE had its first surge last year. I think this might be synced up with the market going down. Like it's actually a rotation into defensive, into healthcare, into energy, into banking, into uh, what's the thing for NE? I forgot the name of the sector. Utilities. XLE looks the same as XLV, and XLF not the same, but you get the idea. So yeah, that's kind of it. All of these things, which in theory are separated, are pointing towards a resurgence in inflation, because this is exactly what this means. Like Bitcoin going up means money losing value, basically. If Bitcoin goes up, uh, it means if inflation is coming back up. If energy is goes up, it causes inflation to come back up. If copper goes up, it causes inflation to come back up. And given the market situation now and the lack of hedging after this huge expiration, we are in a very, very vulnerable situation. Like uh, we can get a huge drop coming in during the next quarter. Lots of things that can still play out, and this is just like my interpretation of what I see now in the market based on TA mostly, and knowing how things are correlated and how they interact. But it's not really up for debate. These things are all showing the same thing, and the likelihood of it happening are very, very high in my opinion. So do with this, do with this what you see fit, and as we see it play out, I will have more thoughts on it. For now, that's it. Have a good day and a nice weekend. Bye bye.